What a relief here, seeing these numbers. I mean, they're finally back to growth, which
Hmm.
is really good. And their guidance right now, again, pretty much in line. And what's really encouraging to me about that 4Q guidance is that they say that they've really not baked in any of those ad tier expectations. So there is potentially a lot of upside to that guidance as well. Remember, 4Q is one of their heaviest quarters. They have a huge lineup of big hitting content titles. So again, there's a lot of optimism in this report.
Well, and so what do you think specifically Netflix is trading on right now? Geeta continue to trade 10, 11% higher. The stock is down 60% this year. Is it that everybody was so negative on the company, or is there something very specific that you would point to here?
I think what everybody was kind of really worried about was, has subscriber growth really kind of hit that wall? And just the fact that they did speak to a lot of those seasonal factors in 1Q and 2Q, just the fact that they've been able to kind of reverse those trends and more than deliver. They've obviously beaten guidance, beaten consensus estimates, and now you do have a very viable catalyst in terms of advertising. Some of the engagement metrics that they put out in that letter, those are huge engagement metrics. Those would be, that's a gold mine for them when they're trying to attract huge ad dollars, which is exactly what they're trying to do. So any advertiser would want to jump on that opportunity. And so
Yeah.
this report really sets them up, I think, so beautifully for that launch of that ad tier.
How is this a read across the industry as we're seeing Walt Disney, Roku, Warner Brothers all lifted on the back of this in after hours trading as well, Geetha? Or how much is this idiosyncratic, specific to Netflix?
I think a lot of it was specific to Netflix because we saw subscriber growth kind of completely stall at Netflix. Whereas we were seeing some of the other platforms actually report growth, but you have to remember they're all in different stages of their life cycle. So obviously Netflix is the earliest game in town, so they obviously had that huge first mover advantage. I think what it tells us is obviously there still are people, who are going to be willing to subscribe to the service. The market opportunity is still pretty much there. These streaming services just kind of have to find ways now, creative ways of monetizing their audiences.
They talk about competition, saying that right now their competition is still losing money as they pivot from linear to streaming. But then they say ultimately, we know that our competitors are going to build a sustainable, profitable business. What is the competitive landscape that Netflix is really addressing here?
Yeah, I mean, they are looking at some of their competitors, and we can, talk about Disney, of course. They have huge pieces of content. They've launched in almost all of the big markets. They just have huge, global IP brands. But then you look at some of these other competitors, and Amazon comes to mind. They've made some huge bets just in the third quarter alone with some of the pieces of content, whether it was a Lord of the Rings, for which they spent 700 million for just a single season, or whether it was Thursday Night Football, which again cost them over $1 billion. So, some of these big tech giants, especially with deep pockets, are unafraid. They are willing to go big. So Netflix has to be able to position itself well against all of these competitors, whether it's, the old media companies or some of these newer tech entrants.